Hello, this is Jenny Kassan. I'm the queen of getting your business funded on your terms, and I'm here to lay down the law about all the different tools and tips and tricks and knowledge you need to have more success with getting the right funding for your business. I wanted to share something that I've been thinking about lately, and we're doing this book study. We have almost like 80 people that have joined, and people are at all different levels. There's people on the call who have raised money for their business before. There's people on the call that have invested in businesses. There's people on the call who are just getting started with their own business and just learning the basics. So I've just been thinking a lot about financial literacy, finance literacy. I hate to call it financial literacy because usually what people mean by that is, oh, how do you allocate your portfolio between stocks and bonds, or how do you what is compounding interest and all that. What I'm more talking about is literacy around business funding. How do businesses get funded, and what are the different options? What are the different legal structures that are available? What are the laws governing how you raise money for your business? And obviously most business owners or even aspiring entrepreneurs or anyone thinking about starting a business know very little about all those details, because why would you know? No one is ever taught. I mean, I knew nothing about it when I first started doing this work almost 15 years ago. Lucky for me, I was able to learn a lot, learn on the job while I raised money for my own business and also helped others raise money. But so I put together this quiz to check on your fundraising literacy or your business finance literacy. We're going to be sending it out as part of our monthly newsletter for our business. So if you want to test your business financing literacy, you should get on our email list. If you're not on it already, just go to jennykassan.com and join our email list, and we're going to be sending out 10 questions to test your financing literacy. And I just came up with 10 things that kind of come up a lot that are sort of basic things about, how businesses get funded, how they're structured, what different kinds of funding is available, all of that. And one of the questions I asked, I thought I would share one of the questions and give you the answer. It's probably the hardest question we have in our fundraising literacy quiz, and that is, what are the 3 different ways that an investor can exit from their investment? And I'm talking really about an equity investment, because if someone lends you money, if their investment in your business is a loan, then it's pretty clear how they're going to exit. Eventually, if all goes well, they're going to get paid back with interest. But what if someone makes an equity investment in your business? What are the 3 main ways that people can exit from that investment? So I'm going to share the answer. So if you take the quiz, you'll get at least one right. But so the 3 main ways are: number 1, if you sell your business, your equity investors will get paid. They'll get paid for their ownership interest in your business. And that's the way, that's the venture capital style of exit, that when venture capitalists invest in a business, that's generally how they're looking to exit, is that the company they invest in gets sold to another company for a certain value, and then those shareholders that invested get their money back out, but at a much higher amount because the value of the company has gone up. But you don't have to be a venture capital style business to have that happen. I actually had a client recently just sell her business just to a larger business with similar mission. And everyone who invested, she had safe holders, she had a bunch of shareholders, everyone got paid. So that can happen. So that's kind of the most well-known way, because that is the way that venture capitalists are usually looking to get paid. But there's 2 other ways. One way is your investors can sell their equity to someone else. So they can take their stock or their membership interest in your LLC and sell it to someone else. There are some legal rules governing how that can happen, but as long as they've held their investment for a while, generally speaking, they can sell it to someone else. If you raise money under regulation crowdfunding, People who hold their investment for a year are actually fully free to sell their investment to someone else. So that's a possibility. It may not be easy to find a buyer, but if you can find a buyer, that is one way to exit. A third way we call structured exit, and that's basically when the company itself enters into an arrangement with the equity investor to buy back the equity in a certain pre-agreed way at a certain pre-agreed price, or a price that gets determined based on maybe a future valuation, or it might be a number calculated based on the current earnings of the company. And that's a really common way that my clients will have their equity investors have an option of exiting, because that way there's no pressure to sell the company before they're ready. And if an investor does want to exit, there's a way that that can happen, and it's already figured out in advance, like in the legal documents, how that would happen. So that's the answer to one of our questions on our fundraising literacy quiz. So if you'd like to test your literacy of fundraising, get on our email list if you're not already on it by going to jennykassan.com. Also, we did decide, because the book study has been such a success, and I've really enjoyed having such a large number of people on the call with different types of questions, different levels of experience. I find it very fulfilling and enjoyable to be able to answer people's questions about fundraising. This is an ongoing program that you can join, and we have 2 group calls per month where I answer people's questions. We also have an online platform where we answer questions and share resources. So it's called the Capital on Your Terms community. If you are interested in that, we do have a place you can sign up and go to bit.ly/raisecap-membership. bit.ly/raisecap-membership. And I'll also put that link in the comments below. All right, thank you so much for joining me. Don't forget to raise money for your business on your own terms, and don't take money from anyone that is not the right fit for you. All right, bye.